Okay, hello guys, how are you? Good evening. Uh, I will be breaking down the NFP today on 5 June 2026. This is the entry I did not take on my live account, the Gold funded account, since uh, news trading is always bad on funded accounts. So let's look at the price or how did price go around this NFP. So first of all, let me just do a small setting here. These are IPDA data ranges that I have marked. So I hope you know about these IPDA data ranges. If you don't, then you can find the video in ICT's core content month 5, the first video. That is a very good video. So this will be a quick breakdown of the trade I took. That is here. This is the trade I took on NFP, before NFP, and then the booked here on midnight open. So yeah, let's go and see the trade. So if you go on the daily time frame, you will observe that the price has been in a bearish trend on gold, really bearish trend, with an S&P on previous week low and a previous week high, sorry, and then we have been moving clearly down. There has not been a clear weekly profile because Monday, Tuesday, and Wednesday they continued down, and then Thursday did some continuation after sweeping the Wednesday's high. So I was not expecting price to create the low of the week and move towards the buy side liquidity, since it has already been multiple days since the week started. So the only uh, logical area of price to go was this uh, sell side liquidity here. The reason for this sell side liquidity is because this sell side liquidity was not manipulated by gold euro and gold pound. What I mean by this is there are two, like you have to understand when an SMT will play out and when an SMT will not play out. So if you observe here, this low on gold GBP and gold euro was taken out on 28th May, this specific low, and on gold it was not taken on 28th May. So we had this low SMT with this low. After this SMT was created, price moved up and it went into the daily fairly gap here. This was the higher time frame fairly gap in which price moved up and then created an SMT with the previous week high. It swept out these highs and then it started moving down. So when it started moving down, this was the you can say the signal that this SMT, this specific SMT, is not holding. When as SMT is not holding, it is not manipulating or it is not pushing the price up, then it means that the specific low here, the low that caused the SMT, is a failure to manipulate SMT. It did not manipulate the price and it did not go up. So in this case, when we have a failure, a failed SMT, we take that as a draw liquidity. So in this case, this was the failure to manipulate FTM sell side liquidity. So I was expecting price to go here, and obviously, since this is a bearish price action, we have continuation daily order blocks created in price, so we can expect price to move towards the week low here, which was also the previous month low. So looking at this structure mechanically, I utilize the IPDA data ranges on 4 hour. So IPDA data ranges are simple. You have, if we are in this week, what you have to do is you have to just mark out the starting of the previous week. So This is a step-by-step process that I'm telling you here. So whenever you are in a week, whenever a new week starts, you have to mark out the starting of the previous week. Then you have to look back 20 candles, 40 candles, and 60 candles to the left of the start of the week. So in this case, I have marked 20 candles and then 40 candles and then 60 candles to the left of the start of previous week. So we are in this week, which started from 1st June here, and then the previous week is uh, starting from 24th May, Sunday, 1800 hours, New York local time. So this is the start of the previous week. So I have marked out 20 candles look back from this starting point, this reference point, then 40 candles and then 60 candles. Then you also have to mark out the cast forward 20 candles, 40 candles, and then 60 candles from the reference point. So the left of the reference point, you will see in these time intervals 20, 40, and 60, you will see liquidity points, fair value gaps, order blocks, volume imbalances, and major structure shifts in price. So if you look 60 candles back, we see that we have a structure shift in price here. This was the sweep of price, sweep of liquidity here, and then price shifted its structure here with a great volume. This high made the price go down and created the internal structure shift and also the external here structure shift. In the last 60 candles, what I observed is price is creating a bearish trend. This is a major structure break in price, and now 40 candles back, I see that I have a fair value gap which is inside a daily fair value gap. So I have this 4-hour fair value gap, and also what I observe on in these next in the previous 40 candles that I have a high created here, and in the next in the previous 20 candles, what I see is price has created also some failure swings here and a low here, which is liquidity. So now this is the data we have, and this is the data we have to play with. So 20 candles ahead, what we see in price, we see price started respecting this liquidity point and created some more failure swings, moved down, took out the sell side liquidity here. Why is this a major sell side liquidity, which is important? Because it is inside this 20 candle interval. Price swept this liquidity out. From this, it shifted its structure, gave a short-term reversal towards the buy-side liquidity here, which is again in the 40 candles interval, tapped into our point of interest, which is the fair value gap, and then started its leg here, which was a very clean leg of bearish price action here. And then what we see here again, if you see price started its structure from here, move down, move up and down, up, down. It was a clear lower, 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 high structure. And this is the point where we are in currently in time before the NFP. So we have Thursday sweeping out the Wednesday's high, previous day high sweep, and then price on the lower time frame created a shift in structure which was on 1 hour. Here, this was the structure shift on 1 hour, and on the 4-hour time frame, we had something else. I will just show you in a moment. Okay, so on 4-hour, we are tapping into that premium fair value gap, sweeping our previous day highs, previous day's high, and then moving down, creating another fresh fair value gap here, medium time frame fair value gap, and there is also an opening gap here. From this closing and this opening, there is an opening gap here. So if I just remove this indicator, you will see that this is the closing price and this is the opening price. So we have an opening gap here also. So now moving towards the favorite part, my favorite part, which is the sequence. When price tapped into this higher time frame favorability gap and the 4-hour favorability gap, inside that higher time frame favorability gap, it started a sequence which was 1, and ignore all the inside bars and then count from here 1, 2, 3, 4, 5. After 5 it reversed, it retraced to the upside. 6, ignoring this inside bar. 7, 8, 9, this is the 9th candle. Then 10, 11, 12, 13, 14, 15, 16 inside bar. 16, 17, 18, 19, 20, this is inside bar, so this is 20, 21, 22, 23, 24, and 25. Why is this 25 important? Since we know there are two sequences that we look at, which is 1, 3 slash 4, 3 or 4, 7 slash 9, 11 slash 13, and then 21. And the second sequence we look at is 1, 5, 9 slash 11, then 13 slash 17, and then 23 or 25. So this was the sequence that was running on price 1, 5, 9, 17, and 25. So this was clear: 1, 5, 9, 17, and 25. So this is the reason that I was looking at price reversal here, and this was also the NFP candle. So we have the drawn liquidity here, the sell side liquidity, and the failure to manipulate sell side liquidity here also. So how can we assess that price is going to move from here? So if you look at the 1 hour time frame, we are inside that 4-hour candle, which was the 6 a.m. candle. We moved up towards the opening gap, which was the new day opening gap. And I believe that if we go to, if we look at the 1 hour time frame, we also had the time alignment here. 1, 2, 3, 4, 5, 6. No, I think it was from here maybe. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, and then 15. Yeah, so 15 is here. We have a significant number here, but if it doesn't matter if you don't have the 1 hour time frame alignment, since with 4 hour you use 15-minute time frame alignment and then 5 and then 1 minute. So I was mainly looking at the 15-minute time frame alignment, where price tapped into this new day opening gap. What I observed in price was price started the move from here 1, 2, 3, 4, 5. Then we had long consolidation with an inside bar created here, and no candles highs or lows are breaking up the high and low of this inside bar. So this was the 18 candles consolidation, and then from if you look, this was the 5. This candle broke above the consolidation. This was 6 inside bar, and then this was the 7th candle. So 1, 5, 7 here. So on 7 we sell. Obviously, we have the 7th candle here, and this was also, I guess, this was the SMT also. Yes, there was an SMT with gold euro, and gold GBP did not create the SMT, but there was an SMT here. Possibly, no, there was no SMT here, but there was an SMT with this high. We had this high taken on gold here. This was not taken on gold GBP, and this high was not taken on gold euro also. So we had these SMTs created like this. So mainly I was looking at this SMT since the time was aligned here. So we had 4 hour 25, and then price was sweeping out the consolidation range highs. So it is obvious that price wants to go towards this consolidation range lows, and then we had the seventh candle on 15-minute also. So on the 5-minute, I just went and aligned the time also. So 15-minute seventh candle is this one, which started from this 8:15, and this was the 15-minute candle. And now if we look at the 5-minute time frame, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So this was the 11th candle that did the CSD, and then I executed the trade here. After we had the SMT, and then we had 5-minute CSD here. So when we had the CSD, I went and then took my sell on this candle here when price was breaking this low. So I took the sell here, and then I exited on the midnight opening price, and then price ended up going towards the original sell side liquidity target. This trade, this one, this is the first trade that I did take, and my stop loss was on this high, so it ended up being a loss because price picked me out here. But then when price did the SMT and then 5-minute CSD, I again took the sell here and then took out the entry here. So this took out the profit here. So this was 200 pips move. So well, so uh, this was the NFP on gold. Now let's look at Euro USD. This was also a simple trade utilizing IPDA data range. So I will show the executions later. Let's go towards this price action. Okay, so I have been expecting sales from the start of the month, as I did say in my um, Discord also. Not this one. Um, Here, this was on which date? It says now, but uh, it was on May 31st. So the end of the previous month. So I was expecting sell off in June 2026, which has started, and then this was the point that I was expecting the sells, and then price is already moving towards the sell side liquidity targets, and I am expecting price to go towards these specific low here, and then uh, we will see a new phase of price after this low has been taken out, and this low also, since these are relative double bottoms. So the trade idea was also very simple on Euro USD. So what happened here? Again, IPD data ranges from the previous week start, 20 candles back, 40 candles back, and 60 candles back. So if we look from the previous week opening, 60 candles back, we have the SMT with DXY and a major shift in price here and then here also. This was the major shift in price, which was very clear. And then 40 candles back, we have point of interest here, and we also have these highs created as inducement for this point of interest. This was also a daily Fibonacci gap. And 20 candles back, we see that we have this sell side liquidity here, which was yet to be taken. So what price did was, price started the previous week and it created double tops. It moved down from the double tops, took out this minor sell side and did not take out this sell side liquidity. It created a bottom on the same sell side liquidity. So this was also a weak low. This was a manipulation of price. Price went up again, resisting from these liquidity areas. Finally took out these triple tops and shifted its structure in the next 40 candles. So this is what we expect from price in the next 40 candles. What we had tap into the Willy gap, which was the point of interest. We had the liquidity sweep, and then we had market structure shift. So what is remaining in price? The remaining part is the sell side liquidity, which is yet to be taken, and then this sell side liquidity, which is also part of this sell side liquidity, since this is a manipulation low. Then you had the start of the week, price moved down and started moving clearly with a bearish trend. And then what we see, price moved up clearly. This was the NFP day, and then it created an SMT with this high. So I believe there was a time alignment here also. I did not mark this, but yeah, let's see. So 1, 2, from this high, if we mark out from this high, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So this was the 13th. So when we have 13th here, so we know that we are in that specific time where price is showing us, going to show us some reversal. So this was 13th, and I was expecting price to show its indication that it wants to go bearish. So what it did, it created an SMT with the, I guess, the XY. It created an SMT with, this is GBP USD. DXY, I believe this was an SMT with DXY. I don't remember correctly, but this was an SMT. Yeah, this was an SMT. So DXY took this low out here, but the Euro USD did not take out this high. So lower low here and then lower high here. So what do we expect from price? This is an accumulation of sell orders. So when this SMT was created, and then we had the 13th candle here, so I know that there is going to be a reversal here. So if you look on the 15-minute, what we had was 13 candle here, and then there was no major shift in price, and then what I wanted was a shift in price. So we had a shift here after the SMT from this CSD here. So if you count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So this is the point I believe that I did take the trade. Yeah, this was the point, the 11th candle that 11th, or I believe I counted from here 1, 2, 3, 4, 5. No, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Yeah, so I executed the trade on 10th because there was a CSD, so 10th and then 11th was expected to go down, which happened. So I took the entry here, and then yeah, I took the entry here and then put myself here on the above the SMT highs, and then price went straight towards the new day opening gap, and I was expecting price to go towards the new day opening gap and also towards the sell side liquidity here and the draw liquidity here. So this was much confident target, and then this was also more confident target, but the easiest fruit, low hanging fruit, was this new day opening gap. So I took this entry here also. There was no 5-minute confirmation here. This was just a clear 15-minute trade that I took. So yeah, these are the two entries. So let's see if we have a 5-minute alignment also, because since this is the 11th candle here. So if you look 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. So yeah, you can also take an entry here, 17 and 18. 18 did the breakout structure. 19 gave you the CSD, so 20 is your execution candle. So multiple execution opportunities here. So this is for the breakdown of NFP. And if you are interested, then you can also join our Discord for community. This is not really, a free community in a sense that you have to be active. If you participate, then you are allowed to move into this section, Elite Hunters section, in which me and my fellows, they break down trades, and then we take the trades together. So yeah, these were the executions today. This was USD, and then this was gold as expected from NFP. Oh, hope you guys understood something. this is a public journal, obviously, so this is for my own practice. But yeah, good day, and let's hope for a good week ahead.